The biggest question when getting into real estate is whether you should buy single family, multifamily, or commercial buildings, which is 5+ units for apartments. After doing all of them, I'm going to give you the pros and cons of each so that you're able to make the best decision for yourself here in 2024. Let's get into it. Let's start with the pros of a single family investment. With single family, the biggest pro right off the bat is your barrier to entry is going to be a lot cheaper. That means in a lot of areas, you're able to get some of these single family homes for $50,000, $60,000, $70,000, and you're able to put a lot less down and get into these units. So that's significantly cheaper than a lot of multifamilies you're gonna find. Another pro with the single family are the loans that you're able to pull out to be able to get into the property. You're able to get what's called an FHA, which is a first-time home buyer, and that enables you to put 3.5% down payment on whatever the purchase price is, and you're able to get into the house for a lot cheaper. So this is big for a lot of people that are short on cash but still want to buy an asset and stop renting forever. That is a huge advantage whenever you are the one that's paying down your mortgage compared to you paying someone else's mortgage down just by paying them rent. You want to be able to pay the bank just like they are, but you benefit with the principal pay down and all the other benefits that come along with owning a property. Another pro is you're not dealing with seasoned investors most of the time when you purchase single family. That means they might not understand the market as well as other investors, so you might be able to get a discounted price on that end, or you might be able to build up a personal relationship with some of these sellers that want to sell you their home, and they're willing to give you discounts on things that most typical seasoned investors wouldn't do. Another pro is whenever you decide to rent out a single family home, you're only dealing with one tenant. That makes it a lot easier for you to self-manage if you're not dealing with a property management company. On top of that, you'll be able to push for higher rent in your market because renters like to feel like it's their own home. They're not in a townhouse, they're not in an apartment building, they have their own home, maybe a fenced-in backyard that they're able to bring their family to and have a nice space away from other people. That will give you an extra couple $100 a month in rent. And the last pro I can think of is that whenever you do first get started, any repairs or maintenance you need to do is focused on one house, so it can be a lot less overwhelming whenever you're first getting started. Now, let's get into the cons of single family investing. And the first absolute biggest con I can think of are the interest rates you're going to be dealing with when buying a home in 2024. Back in 2019 through 2021, the interest rates for homes were from 2.75% to 3.25%, so your mortgage payment was a lot lower with those type of interests compared to today. Back in 2021, a $130,000 house, your mortgage payment was around $800 to $1,000 a month, depending on how much you put down. Now with today's rates at 6 to 6.5%, you're looking at a $1,200 to $1,300 mortgage payment on the same $130,000 house that you could have bought in 4 years ago. So depending on the market that you're in, if you're planning on renting your house out one day, it's going to be a lot less cash flow that you're going to be able to make since you're going to have a higher mortgage payment to pay each month. So for example, say that your market can support $1,200 to $1,400 a month for your single family home. Back if you would have purchased in 2019 to 2021, you would have been cash flowing $400 to $600 a month on that single family. Say if you're paying $800 a month in 2021 and you're collecting $1,400, that's $600 that you're making each month. And with today's rate, the rents haven't seen the increase that the mortgage payments are. So the rents are still at about $1,400 a month. And if your payment for that same house is at $1,200 to $1,300 a month, you're going to be in big trouble because you're only making $100 to $200 a month compared to 4 or 5 years ago where you were making $400 to $600 a month, which would have been a lot better of an investment. So say you are making that $100 to $200 a month on a single family nowadays, and say in about 4 or 5 years, you're able to save up $10,000. Well, what if an AC unit breaks, a roof needs fixed, bigger repair happens, and now all of a sudden, all that $10,000 you saved up over the 4 or 5 years is gone with one maintenance problem. So you're not able to cash flow as much as you would be on multifamily with a single family with today's rate. Another con is vacancy. When a tenant moves out, you're most likely going to have that unit vacant for a month, maybe 2 months. So that is going to come out of your pocket whenever you own it and there's no tenants to support that mortgage. So if you are paying a $1,000 a month mortgage payment, then you have to come up with that $1,000 for the 2 months that it's vacant. Compared to multifamily, you would have other units bringing you in money. Another negative with single family is that once you get 10 loans from a bank, you're no longer considered a single family home buyer. You have to start getting business loans with banks. That means your rates might not be 30-year fixed anymore, and your cost to to entry might be higher. But with that being said, that's at 10 properties. You would still own 10 properties of real estate before you get to that point. All right, now let's talk about the pros of multifamily, which is personally my favorite investment. And when I say multifamily, I mean between 2 and 4 units. So a duplex, a triplex, or a fourplex. I don't mean anything that's 5+. And I love these because you get the advantages of single family and you also get the advantage of an apartment building, but it's all combined into one. And what I mean by that is when you're buying a 4 unit, a lot of your risk, like we talked about in single family, isn't there. So whenever you have something big like maintenance wise that comes up or vacancies that comes up, you're still collecting from say 3 other units or all 4 units that are working together to pay for that expense. So you don't have a drastic drop in your cash flow like a single family. So if you have a vacant unit, you still have 3 other units paying for that vacant unit. So you're still in the positive compared to whenever you have a vacant unit single family, then you have to come out of your own pocket, pay for that mortgage. And if there's a big expense like a roof or an AC that needs done, you're still cash flowing more money that's able to pay for that compared to a single family. It might eat up 4 or 5 years of your cash. And another great pro for 2 to 4 units is that you're still able to take advantage of the loans that you're able to get with single family. So you can go ahead and get a 30-year fixed note on a 2 to 4 unit building and also be able to live in one of those sides and get an FHA, which means you only have to put 3.5% down to get the loan and get into the property and start your investing journey. So what that means is if you have a duplex or you buy a 2 unit, you get to live in one side, you collect the rent from the other side, and that's what pays for your mortgage. So you're able to save up all the other money you make from your job or wherever else you bring in income, and you're able to save up and get into another investment property quicker instead of dishing that into a mortgage payment that you have to come out of pocket yourself. So you get all of these great loans and you have less risk because more units are bringing you in that money. So that is why I absolutely love duplex, triplexes, and fourplexes. The only negatives I could see with buying multifamily between 2 and 4 unit is say if you just got inherited money and you have $1 million or $2 million. It might be a little harder to go ahead and invest that money into real estate because you're only buying a little amount of units. Compared to if you purchased a commercial building with 10 unit building or 20 unit building, you're able to deploy that money a lot quicker and start getting returns on that money faster. Now, you could also buy 10 different 2 to 4 unit buildings, but it just might take a little longer to go ahead and do your due diligence and find the right property to then get your money invested and start collecting a return on that money. So a 5 unit plus building might have a higher purchase price, say $1 million, and you have to put 25 to 30% down on those buildings. So you could real quickly be putting $250,000 to $300,000 down on a commercial building, and you'll be able to start making a return on that money a lot quicker. Another negative people say is the more units, the more tenants, the more of a headache that I'm gonna have. Well, yes, that logically makes sense and seems to be true. Most of the big problems, like a roof, AC, things like that, they're all still under the same building, so they get tackled in one go. They just might try charging you a little bit more for those expenses, but you're also bringing in more money to go ahead and support that. So it all evens out in the long run. If you have 5 single family properties, you could have a problem here, a problem there, and a problem over there all in the same day, and it's not at the same location. So that can honestly start picking up more stress than a multifamily building in the same location. So lastly, what I'm going to cover is the 5 unit plus commercial buildings, and I can speak on this a bit since I do own a 9 unit apartment building, but a lot of the pros are going to be the same as the 2 to 4 units. So a lot less risk because you're going to have more rent that's going to go ahead and cover vacancies or any repairs that you need. The same benefit that it is under the same roof and all in one location, so your problems are confined to the same spot. And another bonus for bigger buildings is that you're able to get property managers instead of self-managing these things. So property managers are going to go in and take a lot off your plate, like tenant turnover, things like that, to deal with small repairs, and you kind of just manage that property manager and make sure they're doing their job. Also, another great thing I like about 5+ units is that you kind of get to determine the value of your building. And what I mean by that is it's based off of a business, so you're going to get business loans. That means the more money you bring in, the more your unit or apartment building is worth. So if you're able to add coin-operated laundry machines, you're able to raise rents in the building at all. If you're able to go ahead and find a building that doesn't allow pets and you start adding pets in there and charging monthly for that pet rent, you're going to slowly be able to start increasing increasing the amount of money your building brings in, and you get to decide how much your building's worth in that matter, not the market. Now, the downside of owning 5+ units is you no longer get those 30-year fixed loans that you can have for whenever you have 1 to 4 units. So the 30-year fixed is out the window. You're not able to put 3.5% down and go and live in these and get that low barrier to entry A lot of these loans that you have to go get are 25 to 30% down, and they're stretched over that 20 to 25 year period. So you have a higher cost of entry, meaning you got to put 25-30% down. And also, these loans that you get aren't for 30 years. They're for 20 to 25 years, and they're not a fixed interest rate like with smaller units. Every 5 years, your interest rate is subject to change, meaning that your payment to the bank is subject to change. So think about if you bought something back in 2020, these people are in pretty big trouble because their interest rates are changing every 4 to 5 years, and it goes along with the market. So in 2020, they were paying 3% interest, and now in 2024, interest rates are at 6.5%. So with interest doubling, that means that your monthly payment to the bank is going to go up a lot more, and that is going to decrease the amount of cash flow you're bringing in, meaning that the amount of rents you pay and the amount you pay to the bank is getting tighter and tighter because the amount to the bank goes up. So you have to be careful with that whenever you're buying a commercial property. All in all, my favorite's a 2 to 4 unit. All the benefits you get from 5+ units and from 1 unit seems to all kind of filter into that multifamily 2 to 4 unit range. You're able to collect your rent, pay your mortgages, and save up a lot more money faster to go ahead and start purchasing and expanding your rental portfolio. Now, if you want to learn to buy in today's market, click my next video. If you're buying, you need to be buying with seller finance, and you get to dictate the terms, not the bank, and set yourself up for success in the future. My name's Graydon. Thank you guys for watching. Subscribe, leave comments down below with any questions, and I'm going to catch you guys in the next one. Peace out.